Guys, welcome back to the channel, welcome back to a new video. Hope you are enjoying your weekend break. I wanted to upload a video a little bit different than usually. For once, we are not really going to look at targets and prices and trades, but we are going to look at Bitcoin from a little bit of a different view, and the weekend is just a perfect moment to do so. And I chose the title when everything breaks, or everything that you assume is not coming to fruition, that you're wondering yourself, is everything broken? Do we need to accept a new reality? And I just want to put a few things in perspective moving forward from the current quote-unquote bear market, maybe transitioning into a accumulation phase, and then the future bull market, to what to expect. If you like the content, please do me a favor, like, subscribe, click on the bell, click on all so you don't miss anything. Leave me a comment, share the video with your friends. If you think this is useful, also feel free to follow me on Twitter and Instagram. Links are also in the description. And of course, like I said, I want to look at the king of crypto, Bitcoin. And as you can see already, draw some stuff out in the chart. And this time, during the bull run and the bear market, everything is a little bit different. And a lot of people are wrong with their predictions, with their targets, with their timeline, and we are going to discuss it. When we moved up from the bull market, so that was approximately in 2020, then the stock to flow model suddenly became very popular from Plan B, because in a few months the stock to flow model gave a certain outcome where the Bitcoin price should be, and in a few months in a row that price was sometimes with only a few dollars in between to almost the exact dollars. It was only a few $100s between to what he or his model forecasted and where we eventually really ended the month. And that went well for a few months in a row until we had the dump down here, and that model was a little bit invalidated, or a little bit it was invalidated. And that was then the first thing that kind of broke in the system, because how is it possible? This was the model that we needed to use to calculate where Bitcoin should head it and approximately which date. It was almost too good to be true. And then of course we had the big dump down, and then eventually went up. And remember when a lot of people said we are expecting 200k, 180,000, 220, 250 to even $300,000 for Bitcoin within a year or 2 years. There was even a talk about lengthening cycles, because there's more adoption in the market, therefore also the price is a little bit higher, and therefore everything now takes a longer period of time, longer bear markets, longer bull markets, so there are lengthening cycles, and therefore this bull market would have continued for another year or 2 years until we reached that 200,000. And these drops, these major drops that took weeks or months, were the new normal. Well, at the end of the day, we just made a very big M pattern, and eventually that was the start sign of the bear market, and we really just went lower, lower, lower. And as you remember, this was maybe that very big flag pattern, and eventually we broke to the downside. A lot of people, when we went down, said we will never breach 29,000. That was the famous Michael Saylor level, because Michael Saylor is one of the biggest holders of Bitcoin in the world, and he had an average buying price of approximately 29,000. And no way that the big money will let the price go under their average buying price. So whatever happens, the price shoots up. And so far, that was proven in the past by these wicks and by these candles, that whenever we hit it, we actually kind of just right away shoot up or found some kind of base and then went higher, until we broke it here at the beginning of June in 2022. Another myth that was broken, and another reality that was shattered. So not only did the stock to flow model failed, the lengthening cycles failed, the 200k mark failed, Michael Saylor failed, and then we went lower, and then all eyes on the price were at $20,000 ish. That was the top of the bull market in 2017, and that was a valid level. Matter of fact, that was also my macro bear market target. And the reason for that was because this bear market here in 2018 and 19 bottomed out at the previous top of the bull market before this run up to 20k. So the bull market before the run up to 20k, that one topped out at 3000. And also from a calculation perspective, that sounded very logical. We have a top at 3k, we run up to 20, then we bottom out at 3k to retest the top, we go higher, and then eventually we go down to 20k to retest it. That is then the bottom, and then we go higher. So again, also if I needed to choose something for a bear market, then that was my number, 20,000. But of course we went lower to approximately 15,500. There are still a lot of people waiting right now for approximately $10,000. And the reason why they're doing it is it's a big psychological number, but also it is a 85% drop, which equals the percentage of drop that we had in the bear market from 2017 all the way to approximately 2019. So this drop from the top to the bottom was also approximately 85%. And that 10,000 gives also a very nice support and resistance. If we look to the left on the chart, you can see it was resistance here and here and here. Then we broke through, and then it was support here. So it is a quite significant level, the $10,000. Now, of course, we can still reach it. Doesn't mean that since we're pumping up the bottom is in, we're going higher. Like I said, everyone can be wrong, and for whatever reason you had, or for whatever reason you had to believe that this was the bottom, or it was the previous bottom, the bottom before, eventually you'll see that the market is just a mechanism that gives you data, and for whatever reason we can also just dump down again. I have to say I was also quite surprised now by the latest pump that we had, because it doesn't really fit into the accumulation phase that usually follows after a big bear market. So maybe my thesis of a possible bottom at 15,000 is maybe still not in play, that this eventually needs to reverse and then we are going lower again. It could be, but so far I'm staying to my thesis that I think that 15,000 ish was the bottom. Again, this push up is a little bit of a surprise, but it is what it is. Another thing that we now have seen for the first, and that is if we're just looking at some of the indicators, and I need to zoom out to the monthly. The RSI is an indicator that's being used by a lot of people, is that we said we have never seen the RSI going as low as it is right now. We went as low as, let me check, I think it is 40, even some indicators it's even below 40. That is something that has never happened. I think even at some charts it's 38. So when we broke this low right here, we said, well, this was a very painful, crucial bear market, and we stayed so long at 3k and so long at 6k. Like, it will probably never go as low anymore, and you can see that yes, we can. Everything is possible with trading. Also, an indicator is just a thing that gives you some data, but it doesn't say anything about what can or cannot happen in the future. So also here we broke something for the very first time that no one expected, again after all the stuff that happened here before. Another thing that put a lot of people back on their place is the hash rate. This is not something that I use a lot for trading, but it says something about the power of Bitcoin and a network. And you can see here that during 21 and 22, the hash rate in general just goes up. And they said, well, if there's a bear market, then there should be a little bit of a lower hash rate. I think those two are not so correlated, but some people use this to determine where the price go to. Again, I do not use it at all. I think price is just a matter of supply and demand. And of course, also a little bit of sentiment in the market. When it comes down to crypto, it's a little bit of a sensitive space now and then. But if you think now here the hash rate is down, we should start buying here in July 21, then you have a bit of a write up. But in 2022 we had the bear market, so that would have been a very bad indicator. The hash rate chart for BTC to determine if we are going higher or lower. So also the idea that the hash rate chart tells us something about future return is absolute BS. Another one that we can put in the trash next to the stock to flow model and all of the other myths. I want to end actually with the stock to flow model because a lot of people has used this. I remember that there was a time where I think Plan B added more than 100,000 or 200,000 followers in a month, in a single month at his Twitter account. That was how much people were fascinated by this model. But also this one now kind of broke. And of course it is just also a representation of data, but let me explain. You can see here the green and all the other colors, blue and orange and red. That is the Bitcoin price. And when it is the color says kind of how far it is towards the halving. You can see that here on the right side of the chart. But the price then just goes up. It overshoots the blue line a lot. That was in 2015 to eventually come back to the mean. It stays there for a while, then overshoots it again. That is another bull market, then cools off and then just goes back to the mean again. This was the bull market of 2020. You can see that we also overshot that blue line to eventually come back again to the mean, and then this was the bull market that we just had, and we did not overshoot it like tremendously as we should have, as a lot of people maybe expected, way over $100,000. We kind of stuck at $66,000 to $69,000 if I'm not mistaken, also depending on the exchange. And there we kind of had this double top, and now we're just really undershooting that blue line. Well, you could say if we are going to respect that multi-year average, then we should extremely overshoot it. This time to go higher now just to make it to the blue line is already 115,000, and then we still need to overshoot it. So then we would easily reach maybe 150, 180, 200, 250,000 and then come down again. I do not believe that that's going to happen. I think my Uber macro target for a few years from now is approximately 120, 150,000. It is only a double from the last bull market, but I do believe that those tops are getting less and less in the years to come. So if you are just looking in this chart from a macro perspective, you're not trading, you're just accumulating some now and then, and when you're thinking at this point right here, I am going to keep on buying because I'm waiting for this moment to overshoot, then we go down and then I will start selling again. Then of course that moment has never come, or that moment never came, and then of course you're looking to a drawdown of more than 70% from the top that we put in. So also this model with the idea of overshooting back to the mean is also actually invalidated. Now I don't try to be too negative, but the moral of the story of course is that for everything is a first, everything can break, and for trading really everything can happen. You might not believe it, but Bitcoin could go to zero if everyone starts selling at the same time and no one wants to have it anymore. Then eventually an asset class can go to zero, just like a stock can go bankrupt, can go to zero, and it can just kind of dry up and then it's over. But of course it can also shoot to the upside. Just try to be not too optimistic and think within a year or two everyone's driving a Lambo, we're going to $1 million. It will probably not happen. But also understand that whatever indicator you're going to see in the next year, next 2 years, because of course with the higher the price, the more of these so-called crypto gurus will suddenly pop up and saying that they have the indicator, certain maybe website or theory or narrative, whatever it is, to kind of lure you in, and eventually it doesn't happen because of reason ABC, and then you look back at it and you think, how could I have been so stupid to only rely on one story or one indicator or maybe one website. Just keep a broader mind, a broader perspective for what can happen in the future, and all of this of course what you see here so far did not play out, although I think the majority of you have heard of one or more, or maybe even relied on it for a little bit. That was it for now. Just let it sink in for today, for the Sunday. Come back tomorrow fresh to the charts, and then of course we are going to look at the most important charts again, the trading, the targets, and let's try to make a good week out of it. Thank you guys so much again for watching. If you like the content, please do me a favor, like, subscribe, click on the bell, click on all so you don't miss anything. Leave me a comment, share the video with your friends if you think that's useful. Also feel free to follow me on Twitter and Instagram. Also those links you always find in the description, and see you guys very, very soon again in the next one. Bye bye.